When we think about the economy, we picture stock charts, interest rates, and government budgets. But beneath those headlines, hidden forces quietly shape how money moves and how the world changes. The economy is like an ocean. On the surface, we see waves: inflation, prices, jobs, currencies. But beneath them are the deep currents that truly drive everything: technology, policy, power, and psychology. And right now, those forces are colliding. Take technology. It's no longer just about convenience. It is the economy. Data has become the new oil, algorithms the pipelines. Every click, every transaction feeds a vast system that predicts and influences what we do next. Companies and governments now know more about how people spend than ever before. Artificial intelligence can predict when you might default on a loan or when you're most likely to buy something expensive. That kind of predictive power changes not just marketing. It changes credit systems, risk assessments, and even social policy. And it's creating a world where information is money, literally. Whoever owns the data owns the future. But while technology races ahead, the second force, policy, tries to keep up. Central banks and governments are like captains steering that massive ocean liner we call the economy. They try to control inflation, stabilize currencies, and manage growth. But lately, they've been facing waves bigger than they can handle. For decades, low interest rates fueled easy money: cheap borrowing, booming real estate, massive stock growth. Then, the pandemic hit. Governments flooded the world with stimulus, and central banks printed trillions of dollars to keep the system afloat. It worked, temporarily. But now, we're seeing the consequences: prices rising, currencies shifting, and trust in traditional money systems starting to wobble. The rules that once defined economic balance, like supply and demand or fiscal discipline, are being rewritten in real time. And no one truly knows what the new rulebook will look like. Then comes the third force: power. Who controls money, controls destiny. Right now, the world is in the middle of an invisible economic tug-of-war. The United States, China, the European Union, all are fighting not just for political influence, but for monetary dominance. The US dollar has ruled global trade for almost a century. Every barrel of oil, every international loan, every major transaction, all priced in dollars. But that dominance is being challenged. Countries are experimenting with digital currencies. China's digital yuan is already being tested across Asia. The European Central Bank is exploring a digital euro. Even smaller nations are exploring alternatives, seeking to reduce their dependence on traditional power structures. This shift isn't just about technology, it's about sovereignty. When nations can create their own digital money, they can bypass traditional systems like SWIFT or Western-controlled banking networks. That means more control, but also more tension. And then there's the fourth force: psychology. Money, at its core, isn't real. It's a belief, a shared illusion that these numbers on a screen, these printed pieces of paper, have value because we agree they do. When people believe in the system, it works. When they lose faith, the system shakes. And lately, faith is fading. Ordinary people are starting to question the system itself. Why is the cost of living skyrocketing while wages barely move? Why do stock markets hit record highs even as families struggle to pay rent? Why do governments always seem to bail out the big players while the rest are told to tighten their belts? It's not just frustration, it's awakening. People are realizing that the economy isn't some natural law. It's a man-made construct, shaped by decisions, policies, and interests. And when that awareness grows, it changes everything. Let's talk about inflation, because it's the symptom everyone feels. Prices rise, savings lose value, and suddenly, what you earned last year doesn't stretch as far this year. But inflation isn't just numbers, it's psychology at scale. It's the erosion of trust in money. When people start believing their money will buy less tomorrow, they spend faster. Businesses raise prices in anticipation. Governments print more to catch up. It becomes a feedback loop of fear. And behind that loop, you'll always find a deeper imbalance: too much debt, too much printing, or too much greed. Meanwhile, A new generation is coming of age in this shifting world. A generation raised during crises, recessions, and volatility. For them, saving in a bank feels outdated. Investing in traditional markets feels rigged. So, they look for something different. And this is where the story takes an interesting turn. Because while all these hidden forces move in the background, a quiet rebellion has been building. A digital revolution in how we think about money itself. Enter Bitcoin and decentralized finance. Whether you love it, hate it, or don't fully understand it, you can't deny one thing. It's changing the conversation. Bitcoin was born from distrust, a direct response to the 2008 financial crisis, when the world saw that too big to fail really meant too big to punish. It promised something radical: money without middlemen, value without permission, and ownership without borders. At first, it seemed like a fringe idea, but over time, it became a movement. Millions began to see Bitcoin not just as an investment, but as a symbol of independence, transparency, and control. And now, in a world where inflation eats savings and governments play musical chairs with debt, Bitcoin stands as a quiet alternative. It doesn't rely on politicians. It doesn't care about interest rates. It doesn't inflate on command. It's just math, open, predictable, and incorruptible. Of course, that doesn't mean it's perfect. The price is volatile, the adoption curve is steep, and the technology is still evolving. But the idea, the philosophy behind it, is shaking the foundations of how we think about money. Because the hidden forces that once moved the economy are being exposed. Technology has made money digital. Policy has made it fragile. Power has made it political. And psychology, well, psychology is making people rethink everything they thought they knew about value. So, what happens next? We're entering a period of transition, a time when the old system and the new system will coexist, clash, and eventually merge. Governments will continue to issue digital currencies. Corporations will tokenize assets. The internet will evolve into a financial ecosystem where code enforces trust instead of banks. But that change won't come without struggle. There will be resistance from those who benefit from the status quo, those who want to keep money centralized, controlled, and predictable. Yet history shows us one thing clearly. Once an idea about freedom takes hold, it's almost impossible to stop. The world's money system is changing, not in government offices, but through code, communities, and people who are rethinking what money means. Money has always been a story we choose to believe. Now, the question is, who writes the next chapter? The same institutions that failed us, or ordinary people building something fairer and freer? The economy isn't just shaped by markets or policies, it's shaped by trust. And that trust is shifting. When you hear about inflation or interest rates, remember, those are surface ripples. The real change runs deeper. Technology, power, psychology, all quietly rewriting how money works. We're not just watching this happen, we're part of it. Every choice we make helps shape the next system. Money isn't just currency anymore, it's power, it's freedom, it's choice. What if your money worked as hard as you do? What if it wasn't trapped in a system built for someone else's gain? That's the promise and the challenge of the Bitcoin difference. The hidden forces are already moving. The question is, are you ready to move with them?